All right, I've started the recording now, so let's start the session. As I mentioned before, Pierre van der Eng is speaking first on the topic of securities trading in a co-integrated market, Indonesia from 1890s to the 1950s. All speakers, I'll give you a warning 5 minutes before the end of your allocated half an hour, and we're looking to have people speak for 20 to 25 minutes to allow some question time as well. So over to you, Pierre, to start off.
Good. Well, thank you, conference organizers, for accepting my paper for a presentation. Maybe it suits the fact that it is an Asia-Pacific conference, therefore it's good to have, perhaps good to have a paper on Indonesia. I'm interested in economic growth, measuring economic growth in Indonesia. I've been doing that for yonks. And I'm now at a stage where I'm trying to interpret the different stages of economic growth in Indonesia. So I'm looking at various institutions that impacted on how economic growth shaped up in the long term. And one of the institutions that I've always wondered about is the degree to which the stock exchange that existed in Indonesia was a vehicle, played a role in the mobilization of capital savings in both Indonesia, if not internationally, particularly in the Netherlands, for investment by companies in that country. Now, it's very difficult to find any information about the stock exchange, which did exist in Indonesia from the 1890s until the 1950s. It has sort of disappeared in the midst of time. Even Indonesians, well, they know that there has been one, but they assume that it was very much dependent on the large Amsterdam Stock Exchange, which it was not. So I looked into how that stock exchange in Jakarta evolved until it was reinvented in 1977, because most Indonesians know that since 1977, Indonesia has had an active stock exchange. Before that, who knows? So the reason for this interest is that the literature on financial development in Asian financial markets suggests that these markets, even today, are largely still underdeveloped, with the exception, of course, of Japan, Singapore, and Hong Kong. And one of the indicators of underdevelopment of markets, financial markets, is that market capitalization. So the degree to which companies are listed on the stock exchange and have their shares and bonds traded on the stock exchanges in Asian countries is still generally low. Except for Japan, Singapore, Hong Kong, the role of the stock market in mobilizing capital for investment is low. That is still the case in Indonesia as well. And therefore, the general assumption is that, and that is a linear interpretation of the role of stock exchanges in economic development, that in the past, it must have been of an even more marginal significance. And that applies to Indonesia as well. And in the broad fields of economics and finance, there is some evidence to underpin that suggestion, because as far as there is in economics literature on the development of stock exchanges over time, the argument is generally, yeah, it's a matter of general economic development. It will happen, but the level of development has to increase first. And in the field of finance, there is more attention to some other aspects that come into the story when stock exchanges evolve. It is also very important that effective institutions are created and that, for example, stock exchanges are government regulated. That has been pointed out in that area of academic study. Now, when you look at economic history, Les Hanna, our colleague at the London School of Economics a few years ago, published a paper to look at the degree to which joint stock companies existed around the world in 1910. Effectively, one of the aspects of his study was to estimate market capitalization of listed firms, and he found that Indonesia came out third in Asia, behind Japan and Hong Kong, but well ahead of India. And that was the first suggestion that actually Indonesia may have had as a sizable stock exchange. But it hasn't been documented anywhere, so that was one of the reasons why I thought, well, it's a good thing to try and get more information about that. And that will tie in with all kinds of historical accounts of active and growing stock exchanges before the Second World War in Asia. For example, there is an extensive literature on the stock exchange in Shanghai and its role in terms of mobilizing capital for investment in at least Shanghai, if not the Yangtze region of China. So the basic questions I started off with: what did Indonesia's first stock exchange look like, and how significant was market capitalization in Indonesia beyond the 1910 benchmark that Les Hanna identified? One of the things that I did was try to get an impression of how many joint stock companies there were in Indonesia, and it turns out that there was a significant number of companies registered for limited liability in Indonesia, but also companies registered in the Netherlands or elsewhere that were operating in Indonesia. Altogether, by 1910, more than 2,000, increasing to a significant 3,735, and then decreasing again, but still thousands of such companies. Now, most of them most likely were private companies, and yes, after I've done the numbers, looking at how many companies listed their shares or their bonds in 1910, around about 70% of them had shares and or bonds traded either in Amsterdam or in on the Jakarta Stock Exchange. In 1929, that was 16%, but by 1938, a sizable 20% of such companies had listed their stocks and bonds either in Jakarta or in Amsterdam or in both places. So most companies were privately owned firms, and their shares and bonds were privately traded generally, if at all, if they were not closely held for that matter. So in principle, there may have been a significant market. I then looked at what qualitative evidence I could find about how this market unfolded. And yes, already in the 19th century, securities were traded in Indonesia, roughly since 1814, initially mainly bills of exchange. But after in colonial Indonesia, company legislation was introduced, which allowed the registration of joint stock companies for limited liability status in 1846. Increasingly, company shares started to be traded as well. And the number expanded significantly after the agricultural sector of Indonesia was opened up by the Dutch colonial government to inward private foreign direct investment. Followed by increasing flows of inward foreign direct investment in the fields of minerals, particularly oil, tin, gold, and coal since the 1890s. So by the 1890s, we see a significant curb market emerging, which gradually became institutionalized in the sense that in the 1890s, the Jakarta Trading Association, a club of traders, merchants, opened up its building for the trading of securities. And that led to the establishment of an association of securities traders in 1898. So since then, a more formal stock exchange started. It was self-regulated. and it took the form of an association of securities traders. That example of Jakarta was then later followed by groups of securities traders in other commercial cities, particularly Surabaya and Semarang, also in Java, but also in Medan. Such clubs of securities traders started to come together. I looked at the kinds of companies that had their shares and bonds traded in these stock markets in Indonesia. The largest of them were incorporated in, they were operating in Indonesia, but they were incorporated in the Netherlands. They had done their IPOs and their stock exchange listing in the Netherlands to start with, basically because the Amsterdam Stock Exchange, which was much deeper than the stock exchange in Jakarta. And for that matter, there were no formal barriers to companies listed in Amsterdam operating and being having the headquarters in the Netherlands, operating in Indonesia. So the largest companies definitely they were tied to the intentions of their headquarters in the Netherlands. However, a growing number of companies also incorporated in Indonesia and also started to allow their securities to be traded in the Jakarta Stock Exchange, if not the smaller stock exchanges in other cities. So you also had smaller companies that were doing their IPOs in Indonesia. Their shares and bonds were traded in Jakarta, and sometimes they were also dual listed, both in Amsterdam and in Jakarta. So by the 1930s, there was an active market according to the qualitative descriptions of that I could find. Now, the Jakarta Stock Exchange closed in 1942. The Japanese occupation, they ordered the stock exchange closed. It reopened in 1952 under government regulation, but then was marginalized, effectively related to the fact that foreign companies were not nationalized in Indonesia from 1958 onwards. And then it was re-established in 1977. It was largely moribund in the 1960s and early 1970s, and it gradually revived after 1977. It became more significant by the early 1990s. And securities of foreign firms in Indonesia were traded in Amsterdam throughout the 1940s and 1950s. So we're looking at a dual market here for several companies, especially the largest companies that operated in Indonesia. So I then set out to look at the numbers of shares, the numbers of bonds, both company and government bonds that were traded in Amsterdam, in Jakarta, and in both markets. And they were significant numbers. Yeah. I wanted to assess this in order to get an impression of market capitalization, to be able to compare the case of Indonesia with other Asian countries, and to compare, to trace and interpret market capitalization over time. So these numbers I did that for 3 benchmark years, 1910, in order to compare it with Leslie Hanna's study, 1929, which I assume would be the peak just before the crisis of the early 1930s hit, and 1938, because that was the last year before the situation in Indonesia was affected by the Second World War. So I listed, I made a list for the 3 benchmark years of the company shares and bonds that were listed on the Amsterdam, the Jakarta Stock Exchange, and in both stock exchanges. Like I said, in order to estimate market capitalization, which basically I estimated as the aggregate for all company shares of authorized or approved capital multiplied by the average, the annual average stock exchange quote in these 3 benchmark years. If you wondered what kind of companies they were and how they differed from Amsterdam and dual listed with the companies that were listed in Jakarta only, we're talking about very large companies in agriculture, shipping, oil, finance, and tobacco, agriculture, that were listed only in Amsterdam or both in Amsterdam and Jakarta. So they are the largest by market capitalization. And you can see there how I estimated market capitalization. The ones that were listed in Jakarta only were a lot smaller. The largest of them was the Kincona factory in Bandung, followed by a mining company, agriculture company, electricity company, etc. By market capitalization, they were a lot smaller. However, many of the larger companies were dual listed, so their shares were also traded in the Jakarta and other stock exchanges in Indonesia. The degree to which, I don't know. I can't guess at that. There are no numbers on that. But like I said, I was able to use that in order to estimate market capitalization. Now, I must admit, I did not include the Royal Dutch Company, the one at the top, in the estimate of market capitalization for 1929 and 1938, simply because, and this is the predecessor of the Shell company, Shell Oil Company, simply because by 1929 it was a multinational company, and it was no longer possible to say that this was a company that had most of its assets in Indonesia, different from 1910 when it had indeed most of its assets in Indonesia. So I excluded the Royal Dutch, and like I said, that allowed me to calculate market capitalization expressed as a ratio of GDP in current prices. In 1910, 0.43, increasing to 1.03. Now, these numbers may not mean much to you, but a market capitalization of 1.03 in 1938 is relatively high when you compare it to Leslie Hanna's estimates. It turns out that Leslie Hanna's estimate for 1910 was about the same as mine. And but I have also have the other 2 benchmark years. Like I said, it's difficult to see to what degree the shares of companies that were dual listed were traded in Indonesia, but if they were traded in the same proportions of them being listed in the Amsterdam and Jakarta markets, then we may be talking about a market capitalization rate of 0.08 in Jakarta, rising, doubling to 0.16 by 1938. Anyhow, on the whole, there was a high reliance on the operations of companies that had their shares listed on the stock exchange in Indonesia, roughly comparable to the case of Japan, exceeded the case of India using Rajan and Zingale's estimates, but then for India, they excluded companies listed in the UK, so it's not quite comparable. Now, the 2 stock exchanges were closely integrated. Looking at the quotations of shares in Jakarta and Amsterdam for the 3 years, on the whole, they fall on the line between, the diagonal line, as you can see. There are some outliers. Basically, a consequence of the fact that some shares were traded more in the first part of the year than in the second half of the year, compared to between when we compare Jakarta and Amsterdam. Yeah? So the thing is that annual reporting tended to be happen mid-year. In other words, if the shares go up later in the year due to favorable reports in the middle of the year, and you have more shares being traded in, let's say, Jakarta than in Amsterdam in the start of the year, whereas for Amsterdam it would be the other way around, then you have a discrepancy between the averages for the year. So that explains those outliers. I then use the stock market indices that were available in order to extrapolate the 3 benchmark years that I have calculated. As you can see, there's quite a bit of volatility in the 1920s and 1930s, basically related to the fact that many of the companies were operating in commodity markets, and commodity prices fluctuated significantly at the time. So that leads me to this interpretation of market capitalization as a time series. And that is market capitalization as a ratio of GDP in current prices. I added some green triangles. They are only nominal capital of companies that are operating in Indonesia. But you can see that for compared to the red dots, the 3 benchmark years that I have, they are in the same ballpark. The point there is that many of the companies that were not listed and therefore did not have their shares traded in either the Amsterdam or the Jakarta Stock Exchange effectively were small companies. The largest companies had their shares traded in Jakarta or Amsterdam. I added the 1988 to 2020 estimates of market capitalization, just to compare the current situation with the situation in the past. And the point there is that already in the past, Indonesia relied to a high degree on companies that had their shares traded in stock exchanges. And therefore, underlining the point that I tried to make earlier already, that the Jakarta Stock Exchange as it exists today did not develop in a linear fashion, but was already quite significant before the Second World War. Again, significant fluctuations, basically reflecting the fact that we are talking about many companies operating in primary commodity markets, and commodity prices fluctuated significantly over time. Levels decreased significantly in the 1950s, basically a result of investor skepticism in the future of many of the companies that were operating in Indonesia in the 1950s, to a degree also a consequence of the overvalued exchange rate that Indonesia had at the time. So what I find is an active stock exchange in Jakarta before the Second World War. It was self-regulated and it was highly co-integrated with the Amsterdam Stock Exchange as a consequence of dual listings. The market capitalization GDP ratio for 1910 was comparable to what Hannah found. It was also comparable to Japan, 1929, 38, higher than Indonesia in the 2010s, indicating that the stock exchange was an important vehicle for the mobilization of savings for investment in Indonesia. It grew, it diversified, it served a growing number of individual and institutional investors. And what really matters in all of this, because I'm interested in this institution playing a role in mobilizing capital, secondary markets existed in both Jakarta and Amsterdam, where investors could almost instantly sell their securities, and that contributed to the mobilization of investment capital through IPOs, I would say. And in terms of contribution to the literature, the case basically demonstrates that the significance of a stock exchange does not necessarily depend on a country being in an advanced stage of economic development, because pre-war Indonesia's GDP per capita was low, and it does not necessarily depend on government regulations, because pre-war's Jakarta's stock exchange was self-regulated. How am I doing for time? Oh, sorry, it took more time than I expected.
You're 30 seconds before the 5 minutes, Pierre, so you've still got a couple of minutes.
Okay. Well, have a look at two pictures. It shows you the difference between the Jakarta Stock Exchange and the Amsterdam Stock Exchange. But then, of course, in Amsterdam, a wide range of different securities was traded, not just the securities of companies operating only in Indonesia, as was the case in Jakarta.
Okay. Thank you, Pierre. What I might do is ask you to stop sharing your screen and see if there are any questions or comments in relation to Pierre's presentation. Florian.
Pierre, who were the actual traders in Jakarta? It's like, what is this, like local banks, enriched people that basically have nothing else to do? Companies, like who is actually trading, and are they actively trading, or is this more kind of like we have a stock exchange, but like on most of the days nothing ever happens, and then occasionally some cable came in and now we need to basically get rid of stuff? Or how do I have to practically think about that?
Yeah, they were traders, merchants, as in they would trade many different things, not necessarily only securities. But
Okay.
After the 1890s, some of them started to specialize in securities. Yeah.
Okay.
Because there was a group of buyers in Indonesia.
Mm.
I don't know who they were. I don't know to what degree they were institutionalized investors, but they did exist, and they needed the services of those intermediaries.
Yes. Okay. Well, sorry, can I just follow up? Did they trade on their own account as well? As in, like, the kind of, obviously you have, like, you are executing trades for someone else, but are they basically just speculating on their own, basically kind of like gambling? They're like, oh, I got whatever, some other information, I might basically now use that in kind of like.
Initially, yes, that was a big problem in the 1890s. As a consequence, regulation was tied up. And by 1912, that hardly happened anymore. Yeah, okay. Well, at least not noticeably.
Not officially, yeah.
Excellent. Annika.
Yes, Pierre, thank you for that. Very interesting. I was just wondering about the commodity market, which is basically the fundamental basis of the Jakarta Stock Exchange. How does that, the fluctuations in the Jakarta Stock Exchange on the commodities market, compare with the world commodity market? So do you feel it follows the same lines, or are there big differences between Jakarta and the general world, like New York or any other big commodity markets? And the other little thing that I thought was interesting, the fact that there was a stock exchange in Medan. Would that have been because of the rubber industry in North Sumatra, where possibly also Goodyear from the UK might have had a hand in the movement of that stock exchange?
I did not assess the, thanks for your question. I did not assess the relationship between the stock market indicators in either Amsterdam or Jakarta, how that relates to stock exchange fluctuations elsewhere in the world. No, but was likely there are discrepancies as a consequence of the population of companies that had their shares traded in Jakarta and or Amsterdam being different from a population of companies quoted in New York, for example. Commodities were quite important. I did look at fluctuations during the 1920s, 1930s, or actually during the whole 1870 to 1940 time period. And it turns out that there's a high correlation between the export price index of Indonesia and the stock market indicator as well as I could reconstruct it. The Medan Stock Exchange, well, stock exchange is too much of it's a bit of a misnomer. It's basically a group of traders getting together in order to not only trade commodities but also trade whatever shares they were asked to trade either on their own account or on behalf of customers. Yes, some foreign companies were traded, had their stocks traded in Indonesia as well. Good year? I can't recall that, but I don't think so.
Pierre, thank you very much. That's the end of your time, and I think we've come to a good position. Great paper, thank you. And our next paper is presented by Elissa Lorgulescu, who is going to talk about grain futures trading during the interwar period and introduction of new data set and evidence. Over to you, Elissa.
Yes, hi. Let me just share my screen. Then I can start. Are you able to see my screen and
Indeed.
hear me and
Yep.
see me well? Okay.
Sounds
perfect.
great. Thank you.
Okay, perfect. So first of all, thank you all for being here, and thank you to the organizer of the conference for accepting our paper for presentation. My name is Elissa. I am a PhD candidate in economics at the University of Münster in Germany, and it is a pleasure to present this paper, which is a joint work with Alexander Pilz and Pierre, where we study grain futures trading during the interwar period in the United States, and digitize to this end a new data set and provide some new evidence. Now, before I give you a bit more detail about what we do in our paper, let me just give you a little motivation about why we think this is a very important topic to research. So first of all, the interwar period was an era of great economic and political change in the United States and of course elsewhere around the world. So with respect to the futures markets, the interwar years tell the story of the development and establishment of key institutional as well as regulatory changes that still affect modern futures market that we have today. So both industry and government reforms are often reactions to severe economic crisis. So during the interwar period, the US government passed for the first time important pieces of legislation that were to regulate the grain futures market in response mainly to some severe agricultural market disruptions, such as very depressed grain prices and a spike in speculative activities that was observed during that time. So some of the other important changes that occurred during the interwar years was the establishment of a modern clearinghouse system for the futures exchanges that has survived even to this present day. Moreover, position limits on speculative trading were imposed for the first time. And perhaps most importantly was this data gathering mandate and the consequent release of the data by the regulatory agency that was formed during that time. So one of the questions we aim to ask in our paper is whether this assumed negative impact of speculation, based on which several regulatory changes were made, reflects the interwar futures trading. So why is this relevant to analyze? Well, so far, this long-held view that speculators are these evil traders who cause excessive movements in grain prices is supported only by a simple correlation analysis or graphical inspection, which were the best available tools that researchers had at that time. And in addition, for modern futures markets today, there is some conflicting evidence in the literature. So using more modern econometric techniques that we have today may throw some significant new light about the impact of interwar speculative activities on the volatility of grain prices. So the economic theory suggests that non-fundamentally justified trading can destabilize futures markets. So what we also do in our paper is we look at the driving forces of interwar trading activity and see if these destabilize the markets. And interestingly, to the best of our knowledge, this question has not been yet addressed by the literature. Okay, so till now, little empirical investigation has been done on this early period of futures trading, mostly due to a lack of the data. So our paper digitizes and introduces a new historic data set, which is comprised of daily price and trading volume data on grain futures contracts traded at the Chicago Board of Trade. So we focus on corn and wheat futures markets, which represent two of the most traded and regulated commodities throughout the interwar period. We then construct futures continuous time series and speculation measures based on trader positions data. So to illustrate potential usefulness of the data set, as I mentioned before, we study the drivers of speculative trading decisions and investigate moreover to what extent this interwar speculative behavior affects the volatility of grain futures prices. So as previously mentioned, the newly formed regulatory agency created by the federal government mainly to observe and to investigate the practices at the futures exchanges started gathering daily trading information from the exchanges, which it then published in several statistical bulletins. And although these reports are digitized, our data collection process could not be automated due to the poor quality and the specific format of the bulletins, which I'll show you in a couple of seconds. So therefore, we had to hand collect the daily information from the federal reports and then created our data set. So in order to get an idea of the regional data sources, here is a screenshot of the reports I was just talking about. So more specifically here, you can see a report on the price and volume of trading data. And as you can see, there are plenty of issues that make it especially hard to automatically digitize the data points. For example, the specific format of displaying the prices and their daily ranges. And here in the first panel, you can also see another issue that the source is quite blurry. Okay, so here's another report, this time on futures traders. And again, you can see, for example, another issue here that the numbers are not very easily readable and sometimes very blurry. So some more information on the futures price data we collected. So the price observations represent the official quotations at the Chicago Exchange and resemble the daily information about the opening, highest, lowest, and closing prices traded for wheat and corn futures contracts with delivery months in March, May, July, September, and December. So we basically collect all of this data for all of these types of future contracts. Our sample period covers 19 interwar years, starting with January 1921 and ending with December 1939. So one of the characteristics of the futures market is that it enables the simultaneous trading of several futures contracts with different maturities. And as in the new data set, there is not only one futures price quotation. This raw data on historical futures it is quite unsuitable for any econometric analysis. So for this reason, we further need to create a continuous futures prices time series based on a rolling strategy. So this rollover date basically denotes the time point when we switch from the nearest contract to the next one, and then just create a series for each of the futures market we observe. So we construct two continuous series for each of the futures market and rely on two different rolling strategies, namely on a contract month criterion and on a trading volume criterion. So Here you can see the development of the constructed futures continuous price series for corn and for wheat. And we can see that both of the rolling strategies generate almost identical grain price series, yet with some minor exceptions like here and here and here and here, but these are just some small differences. We also can see that the corn and wheat futures prices at the Chicago exchange were highly volatile and developed quite similarly over the observed period. In this area here, which corresponds, like the beginning corresponds to the onset of the Great Depression, we can see very depressed grain prices. And by 1933, these reach actually historically low levels. And in response to this recessionary phase, the regulatory agency passed in 1936 the so-called Commodity Exchange Act. And interestingly, we can see, especially in the corn market, that the prices began to increase immediately thereafter. So moving now to the futures traders data, we collected data on all daily sales or short positions and purchases or long positions of grain futures contract at the Chicago exchange from the same federal reports. So there are basically three trader categories. So we have speculators, hedgers, and non-reportables. The class of non-reporting traders is simply divided into long and short, but unfortunately, we do not know if these are hedgers or speculators. From contemporary sources, however, we have the information that they are mainly speculators. And why is this important? Because for empirical and robustness purposes, we adopt several approaches for their classification into hedgers and speculators. So we assume that 80% of them are speculators, then we repeat our analysis with a 90%, 100%, and a 50% approach, and we see how our results change. Okay, so we only found data for specific interwar sub-periods. So for corn futures market, we found data for two interwar sub-periods, namely between 1924 and 1928, and 1935 and 1939, while for wheat futures market, we only found and collected the data for 5 interwar years from 1935 till 1939. So based on this collected data, we calculate the changes in speculators' position according to this formula here. So we have net long position speculators today minus net long position speculators yesterday divided by the total open interest of the market yesterday. So basically, if speculators buy more futures or have more net long positions today in comparison to yesterday, this measure over here increases. So here you can see the development of all data on futures traders positions which we collected. I don't want to spend much time on this, but there are in particular two key aspects regarding interwar futures trading that emerge from this illustration. So first of all, here is a development of hedgers short or selling positions in wheat futures. It is quite evident that hedging trading was seasonal. More specifically, we can see that hedgers gradually increased their selling positions with the begin of the second half of each year, meaning that they were selling their winter and spring crops far in advance, seeking therefore this insurance against future price fluctuations. So from this illustration, we can say somehow that the early wheat futures market functioned well with respect to hedging purposes. So now let's take a closer look to the speculators' long or buying positions in corn futures. This area over here highlights a period when the regulatory agency suspended its reporting requirements of the data from the exchanges in response to some voiced allegations. And interestingly, we can see that the long speculative positions have significantly increased during this time. So for this reason, we can argue that the reporting requirements were discouraging bullish speculators to enter the futures market, as some of the members of the Chicago Board of Trade charged. But of course, this requires some further empirical investigation. So moving now to the empirical application of our paper, the starting point here is that traditionally we have two conflicting views of speculators' behavior in futures markets. So according to Keynes, speculators are irrational traders who destabilize commodity prices and contribute therefore to increasing price volatility. In contrast, we have Friedman, and he argues that speculators are actually rational traders who stabilize futures markets and limit therefore the price volatility. So according to these two theories, we have two types of traders. So traders who purchase futures or take the long side of the contract following price increases or sell futures following price declines are positive feedback traders. And in contrast, traders who buy following price decreases and sell following price increases are contrarian traders. And we ask these questions, are interwar speculators positive feedback traders or are they contrarian traders? More specifically, how do they react according to price increases or decreases? And thereafter, we also ask this question, how does this speculative behavior affect the futures market? So, we can investigate whether speculators are positive feedback traders or contrarian traders according to the impact of past returns on the position changes. It is important to say that we also computed return series for wheat and corn based on the collected price data. Apart from the past returns, we further include three other variables in our analysis that might drive interwar speculative behavior. So we have the log basis, and we include this to account for the commodity futures risk premium. Then we investigate how market sentiment affects interwar speculative behavior, and especially we look at the impact of the daily negative media contact from the New York Times newspaper. And as a third variable, we include some stock market returns, which are the Dow Jones returns, to control for the effects of the overall economic growth. So our baseline regression looks something like this, and we estimate it by means of the ordinary least square technique. And here are our main findings regarding our first research question. So our results suggest that in the corn futures market between 1924 and 1928, speculators are positive feedback traders. So the greater the past return, the more speculators are willing to buy futures in this market. In contrast, in the wheat futures market, we find that speculators are contrarian traders. We also find that the basis has a positive and a significant effect on the interwar speculative behavior, which is in line to the theory of futures market, which says that speculators are rewarded with a positive commodity futures premium for accepting the risk from hedgers. And lastly, our results suggest that the negative media context significantly impacts speculators' decisions to reduce their long positions only after the 1929 stock market crash. So these results are quite interesting because they indicate that during these roaring 20s or during these years full of optimism and irrationality, futures traders apparently ignored the daily negative financial markets news. So the previous findings would appear that interwar speculators destabilize the corn markets because they are positive feedback traders and stabilize wheat futures market because they are contrarian traders. So to test this hypothesis more formally, we estimate a univariate gauge model to examine to which extent does this speculative behavior affect the volatility of grain futures prices. So here are the conditional mean and variance equation. And we include the speculative factor both in the mean and variance equation. Here we investigate the impact on the returns, while here we investigate the impact of speculative position changes on the volatility of returns. So we estimate these for each of the futures market and each of the interwar subperiod we observe. And here are our main findings. we find that speculative activities have neither destabilizing nor stabilizing effects on grain futures market. And these findings are based on estimated coefficients from the variance equation, which all equal to 0. We do not find any evidence for these evil grain gamblers who, and our results imply therefore that speculators are not the main drivers of daily volatility of interwar grain futures prices. So all in all, by means of modern econometric techniques and high frequency data that we collected, we offer new empirical evidence to this open question in economic history, and our findings cannot confirm the allegations leveled against interwar speculators. It is also important to say that our results are robust across these different approaches of non-reporting traders, which I mentioned previously. So even though this newly collected data are limited to only a very specific historical episode of futures trading, a thorough analysis of this early period with modern empirical techniques that we have today may provide some interesting new implications for today's institutions and governance regimes. So further work could, for example, focus on the efficiency of the imposed federal regulation and may ask the question, which impact does it have on futures prices and trading decisions of market participants? The data set could also serve to explore empirically market microstructure related questions such as price discovery and behavior of quotes and spreads. And there may be even scope to utilize this data set to explore the implications of futures prices on broader prices. And such analysis could point to interesting parallels to the more recent financial history. So now we have the data and we may be able to provide some further evidence regarding these questions over here. Thank you very much for your attention.
Thank you, Elissa. If you wouldn't mind unshare screening, that'd be fantastic, so that we can see everyone. And I think Dimitrios has got a question for you.
Just applauding.
Just applauding. Sorry, I'm misinterpreting the signs. Has anyone got any questions for Elissa? Florian.
Yep. So, oops, yeah. Okay. I'm trying to understand whether this makes an impact or not, but like, do you assume that effectively each of those markets is kind of like separate? They don't really interact with the others. So obviously there's some of the time period you have like the Great Depression, stock market boom, crashes. So it's like and other financial issues with basically like Europe going off the gold standard and so on. So how much do other markets or what happens in other markets play a role for what happens in those kind of like markets? So saying like are you kind of like showing that historically there's really not an influence, or is saying like yeah, that will be captured by what we kind of finding in our kind of like econometric approaches?
So I haven't been able yet to test the influence of other markets. We just included the stock markets, the Dow Jones series, and we find that it doesn't have any effect on the commodity markets we investigated. So our idea is for further research to investigate these types of issues, also the regulatory changes that I've mentioned, which impact did they have on the markets, and then whether it had a spillover effect on the other markets as well.
Okay. Ken, did you have a question? You look like you're preparing to say something.
Oh yeah, thank you. This further to that previous question, you seem to have isolation between the corn market and the wheat market. Now these are both traded simultaneously on the Chicago Board of Trade, and you come up with the conclusion: Keynes for the corn market, Friedman for the wheat market. I'm thinking that there must be some sort of arbitrage again across those different grains if we're talking about the same market, and maybe we're even talking about the same traders that work in these markets, it is a rather nuanced question, this idea about is speculation destabilizing or not. It's, as you alluded to, it's got a long history, and the question is whether or not speculators are making money or not. If they're making money, if they buy low and sell high, and that's a stabilizing process, and that's the Friedman argument. Yes. You get the other argument if they're consistently losing money, so they're dropping out of the market consistently. If you're arguing that on balance speculation is destabilizing. So that's an empirical question. There could be evidence about the turnover of the participants in the grain market.
So first of all, the periods that we investigate for the corn futures market and wheat futures market are different. So because we did not find the data for the same period. So basically we find that speculators are these positive feedback traders according to Keynes before the 1929 crash. And we find that speculators in the wheat market are the contrarian traders according to Friedman after the crash. So they are also two different time periods that we provide evidence for.
It would be nice to have some sort of integration of the whole story so that one can generalize these matters rather than saying it's period specific, market specific.
Yes, but unfortunately, we did not find any data for the wheat futures market before 1935. So if somebody has a suggestion where this data could be found, we will be more than happy to collect it also and provide some further evidence.
Oh, work harder.
Thanks for that. I will take that as a comment, I think, Ken. I think Annika had a question.
Yes, I do. Actually, two comments I have. One of the things with corn and wheat and anything that is a produce of agriculture, and that includes beef and so on as well, they're all dependent on weather patterns. And we've seen it here in Australia recently. When you've got a long extended drought, the prices of the commodities that are coming from agricultural areas are coming up because there is a lot of scarcity. So I was wondering if it might be useful to also draw up weather patterns for the regions that you've done your research for corn and wheat for, to see how they relate to the weather and the drought and the surpluses and so on. So that's one part of my comment. The other part is producers themselves would lock in prices on the futures trading market to secure their own returns. And I was wondering whether you've had a look at that as well, not just from the trader side as such, the people that are on the stock exchange on the futures trading market, but on the producer side as well.
We haven't looked at this yet, but that's a great advice. Yeah, we can definitely look at the production side. Yeah. Thank you.
Any other questions or comments on Elissa's paper? Fantastic. Well, Elissa, thank you very much for your paper and for joining us. We appreciate it. Moving on to the final speaker for this session, Guillermo Ruiz Stovel.
No. David,
oh, sorry, Florian.
We had a change in the program. So we basically will have first paper by Jing Yon. Sorry, my pronunciation of your name was wrong. One and Sasha Becker, and then Guillermo will be the final paper of the, we're going to have 4 papers.
Apologies for that, folks. In that case, if we can start that third paper, that would be fantastic.
Okay, share my screen. Can you see my screen now?
We can, Cheong Yong.
Yeah. Okay, then let's start. And first of all, thank you for having me in this great conference and organizing this. So my name is Cheong Yong Won. And I am second year PhD student in Monash University. So what I'm going to talk about today is causality between Christianity and literacy rate. So we address about Protestant missionary and local priest and literacy in colonial period of Korea. So actually, the background picture is usual scenery in Seoul, the capital city in South Korea. So if you visit there, you can find easily so many red cross in the city. That means there are so many Christians in South Korea. So compared to other neighborhood country, China, Japan, let alone North Korea. So anyway, my presentation is divided into 3 sections like this contents. As you can imagine, we focus on the causalities between Protestant and human capital accumulations. So I'd like to talk about the background of this research. As you know, many economists emphasize the importance of education in economic development. And when many Korean economists and people at large talk about the rapid growth of Korea, they mention education as one of the factors regarding economic development in Korea. So, however, most studies are that the educational roots of Korea came from the mass education of Japanese colonizer. So, I think the representative work is from Cha and Kimura. So, furthermore, there are actually many studies that colonialism helps for institutional and education development. But we threw the questions over whether it is true Korea as well. So obviously, Japan established many official schools, but the problem is that they built schools for Japanese who live in Korea at the time. So the effect of schools could be smaller for Korean, at least, than we thought it would be. So that is one of the reasons why we are trying to test whether Japanese authorizations contributed to accumulation of human capitals at the time. So then, who truly contributes to accumulating human capitals in Korea? So, and as you know, there are many studies about missionary and their contribution to developing the economy. So I think the most popular one is Max Weber's argument. He argued that Protestant work ethics to play key role in the economic prosperity of Protestantism. And there are many studies in economics as well. Woodbury and Moon's work shows the positive effect of Protestant missions. And Becker and Boseman already showed that the effect of Protestants on the gender gaps and human capital in Germany. And furthermore, by Kuhn and Ma shows that there is positive effect of Protestantism on urbanization and diffusion of Western knowledge in China as well. So then, why Protestants have a positive effect on human capital? There is actual good answers. So according to Becker Boseman, Protestants encourage believers to read the Bible by themselves, and which lead to accumulation of human capital. Then we can imagine when Protestants come to Korea, they also encourage Korean Christians to read the Bible by themselves. So Historically, Christianity was engaged in educational activity during the colonial period in Korea, such as establishing official school or running the Bible class and night studying gatherings and Sunday school and etc. etc. So, and so in this context, Shasha and me show the Christian were associated with a higher literacy rate during colonial Korea. Thus, proving causalities between Christian and literacy rate is our main objective in this research because our previous work doesn't guarantee the causality. What happens? Okay. So to remind our previous research result, I'd like to show these maps. So on these maps show the literacy rate in 1930 across Korean Peninsula, and the other shows the number of priests per 1K. So I think you can find easily relationships between two factors, but as I mentioned previously, it's not guaranteed the causality. So, and the interesting fact is that the North region have a higher literacy rate at the time. So in colonial period, maybe better Korea is North Korea. So before introducing the detailed strategies to estimate the effect, I'd like to explain what data we used. We collect data from many different kinds of sources. So first, in terms of literacy rate and number of priests, we used the census in Korea, published 1930. And literacy rate is dependent variable. And as a side note, the definition of literacy rate is that people who can read and write the Korean language. So, and there are two key variables. One is number of priests at the county level, and the other is the number of churches buildings at town level. So to find out the location of church buildings, we use this data, the index of the Yearbook of Korean Presbyterian and the Yearbook of Korean Methodist. So this data provide the address of Presbyterian and Methodist churches building at town levels. And we collect the data regarding missionary in Korea to use as instrumental variable, and these books and archive provide when they come to Korea and where they had stayed. To make sure our research is robust, we consider a lot of controls like this. Hong and Peg and Parks are kindly shared on these controls 1 to 5, and we add town level control variables 5 to 8. In short, we consider many geographic and economic variables which potentially affect on literacy rate. Okay. So, and we start to show simple OLS research. As I mentioned previously, we can access town level data now. So there was 234 counties and about 2,500 towns in 1930s. So set the equations like this, and I think it's very simple regressions, and beta will capture the effect of churches. So, okay. And table 1 shows the OLS research like this. The average coefficient is statistically significant at 1% level, except for a last column. But that means that a Protestant was associated with the higher literacy rate at the time, and we include every countries that I mentioned previous slide. As a side note, there are the number of official schools among the country variables to capture some effect from official education. So that means even if there is official school, the churches, the number of churches that affect the literacy rate. Okay, but as you know, this OLS does not guarantee the causality, so we introduced two methods to show the causality between Protestant and human capital accumulations. First, we use the exposure level of a foreign missionary as the instrumental variable, and then we address regression discontinuous approach by using unique historical events. So then I think I should explain what is exposure level of a foreign missionary is and why it is a reasonable instrument variable. First, spreading Christianity was the main goal of foreign missionaries who came to Korea. So it was usually related to fostering a native Protestant. Thus, we can argue that foreign missionary had positively affected the size of Christian during colonial period. So, and second is exclusion restrictions. Foreign missionaries should only affect literacy via the number of local priests or churches. Thus, many audience might have a question about this. I think there were two valid reasons that we can assume that foreign missionary didn't affect directly on literacy rate. First of all, according to FSI, the Foreign Service Institution in United States, Korean and Japanese are classified as a Category 5 language, so which means the hardest language to learn for Westerner. So therefore, it was unlikely that foreign missionary can directly affect the literacy of Korean. So even if they established a lot of schools in Korea at the times, they had to hire some Korean people to teach Korean or Japanese language. And Kim and Kim's mentions that strategy of foreign missionary, I mean the policy of the Presbyterian missionary in Korea was not support general educations, but to educate Christian and as a church leader and as the next generation of teachers. Thus, I think it could be one of the pieces of evidence that satisfy the condition of exclusion restriction. So by our archive about foreign missionary, we can draw these maps. The figure 2 shows the distributions of foreign missionary over year. As you can see, the number of foreign missionaries that had grown over time, and the number of them also had increased. And scarce in these maps, the major city in Korea. Okay, therefore we can set up following two SLS system. The exposure level missionaries can predict the number of native priests and fitted value plug into a second equation. And beta ones to capture the effect. So maybe given the time is not enough, I just skip some detailed explanation. So anyway, and table 2 reports the result from IVE research. Number of priests show the positive effect on literacy rate of female, but it doesn't show any effect in male. But these approaches cover all counties in Korean Peninsula, so we cannot make conclusions that Protestant affect only on female populations, because there is some historical evidence about it. So let's move part 3. Anyway, as you know, ivory approaches, they have many problems and it's need of many assumptions. So many people might have questions about the validity of instrumental variable. So I should try to falsification test, but I cannot test it due to lack of data. So to overcome the weakness of IV, we use different methods to address endogeneity. So actually, there were interesting historical events between two denominations, Presbyterian and Methodist, to avoid clash and confusions as missionary work overlaps. Presbyterians and Methodists made a deal about the area of missions. The key point of the committee system is that each denomination had their own territory. So, and they made agreement that they do missionary work in their assigned area only. So, and the map in left side show the territory by its denomination. So, this is North Presbyterian, and this is Methodist. Yellow and pink means Methodist. And actually, there is Australian Presbyterian at the south. Anyway, so we can say that this event is provided sort of a natural experiment. So territory of Presbyterians will be a treatment group, and territory of Methodist will be control groups. So, and according to Kim and Kim's, they argued that Presbyterians was more interested in educational activity through native churches than Methodist churches. So as I mentioned in ivory sections, well-educated Christians are necessary to teach language at the times. And furthermore, Presbyterian had a large capacity than Methodist at the times. It means that it gives us some kind of exogenous shock about the number of churches at the time. So now let's talk about the Srd approach in more detail. So there are actually, as you can see, many boundaries between two denominations. So, but our case, we use only the province of Yellow Sea in our study because most boundaries were based on province boundaries. So I mean, administration boundary. So as you know, it could be lead a biased result due to the different characteristic of the province. So to avoid this kind of problems, we use only the Yellow Sea province. Luckily, both denominations divide the Yellow Sea area into the two parts. So it is relatively free from the potential problem. So additionally, we use dummy variable of Presbyterian area in Srd approaches by using existing church buildings. Given the historical fact that Christians were engaged in official education activities, the church buildings was related to the influence of such activities. So because a physical place was necessary to teach people, and it was likely that people get together in church buildings and to learn something and teach something. However, some of you might have a question whether two denominations to keep the territory agreement in real, and yes, they did. Two figures shows that the heat maps about the number of church by both denomination and the distribution of churches in 1930. So as you can see, they keep the agreement. If we see the map on the right side, there are only a few number of towns that both Presbyterian and Methodist built our church at the same time. If zoom in the Yellow Sea province that we are interested, so it looks like this. The map on left side shows the actual committee agreement, and the map on the right side shows the actual distributions. There is a few overlap place, but it is only at most 2 or 4 towns. And now we call it treated Presbyterian. It is dummy variable, and it equal to 1 if there are Church of Presbyterian. Otherwise, it's 0. So as a previous slide, the figure 5 shows the territory by 2 denomination, and we can set an equation like this. And Presbyterian territory can predict the treated Presbyterian, where there are Presbyterian churches. And the fitted value treated Presbyterians and capture the effect of Presbyterians. And we included the geographic location functions because the boundary is not straight line. It's curvy and complicated, so to address it, we put this geographic location. So before we see the regression result, we draw bin scatter plot in terms of dependent variable and town level controls like this. The positive values in x-axis means the Presbyterian area and its distance from community borderline. So you can see there are huge gaps between 2 borders, but there is no gap in here, and they are very small gaps in market size per. So it means that there is impact from the Presbyterians. So, and table 3 shows the result of spatial RDD result. The number in first row, 75 and 50, and only Yellow Sea province means that the sample include observation that towns are located within 75 kilometers and 50 kilometers, and only Yellow Sea province. So, and all coefficient is statistically significant at 1% level. So it means that Protestant lead to higher literacy rate across every population, regardless of gender. So, and make sure our research or we run regressions to be without overlaps of towns, and table 4 report the result, and still all coefficient is statistically significant regardless of geographic functions and gender. So that means that a Protestant caused the higher literacy rate, and they contributed to accumulation human capital during the colonial Korea. So my conclusion is this, and let me stop here. Thank you for listening.
Thank you very much, Cheong Yong. Any questions?
Yeah.
So, Florian?
The unmute button first. Could I ask about, because you mentioned obviously Protestants, was there the Presbyterians and the Methodists you mentioned, was that the full set of Christian missionaries, or were there others there as well? So it's like, were they Catholics, were they Anglicans, Lutherans? So how much of the full set of missionaries do you capture by just the 2 kind of like focus of the 2 denominations?
Actually, both Presbyterian and Methodist dominated Korea. So it was up to 80% of Christian. So there is only, if I remember correctly, there is only about 50 churches of Catholic. But in case of Presbyterian and Methodist, there is 2,000 churches at the time. So there's a huge number. So I think Presbyterian and Methodist cover most of Christian at the time.
Okay.
Xiong, what was the Japanese occupiers' perspective on all of this? Are you able to give a few comments?
Oh, sorry, could you say that again?
So in the occupation period, what was the Japanese policy in relation to missionaries and teaching language and reading and writing and so on? Did they have, I thought they had an active policy for discouraging those things, but I'm not sure.
Oh yeah, actually Japan is discouraging to Korean people educate Korean language, but the Christian representing some kind of Western culture. If they suppress Christian, that maybe could be problems about diplomacy because the Western nations support the Christian. So maybe Christian give us some protections against the Japanese.
Interesting. Thank you.
Yeah.
Anyone else?
I have a question. So you mentioned that this difference between the two denominations, and one had more of an effect on literacy, and you also mentioned that there was a greater effect on females. But do you have some kind of explanation as to why one denomination would create greater literacy than the other, as far as their teachings or their organization?
Then I have to talk about the plan, the missionary strategies. So in case of a Presbyterian, they more interested in fostering the native Korean churches. So, but Methodists wanted to some kind of centralize their organization. So, and the second reasons, the Presbyterian have the large capacity. So that means they have a lot of human resource to evangelize the Korean people. So I think even if they have the same strategies and did same behavior, maybe this difference comes out because Presbyterian is much larger than Methodist.
Thank you.
Okay, thank you.
Jim, I think you've got your hand up.
Thank you.
Jim,
You're on mute again, Jim.
Sorry. Yeah, thank you. Very interesting. And yeah, I find your general argument about the association of Christianity with literacy and therefore with human capital to be convincing enough. But I would like to perhaps reinforce Florian's point. So far as I understand, there were about 3 times as many Protestants as Catholics in Korea in 1941. But that's still 1/4 of the Christian population that you perhaps might want to think about, because the question in my mind is still, is it Protestantism or is it Christianity more generally? And I don't know if you can in future work explore that question, but if possible, I'd like to encourage you to do so. But thank you again for a very interesting and clear discussion.
Oh, yeah, thank you. Thank you for suggesting. Yeah.
Well, thank you, Chong-Yeong. A really interesting paper, really appreciate it. Going to our last paper for today, which is to be presented by Guillermo Ruiz Stovel, who is going to be speaking on junks, galleons and sloops, commodities and shipping networks in the Manila Intra-Asian Trade database. Guillermo.
Hi, I'm sharing my screen.
That looks good.
So first I would like to, apologize for joining the meeting late, but if you have a serious technological emergency at 6 o'clock in the morning, it's very difficult to solve. But I also like to say that this will be a different paper because of the period and region. I'm also a historian by training, so I don't have regressions. If you have kinds of regressions that you think could be run with my data, I would love to know that. And I'm technically a historian of China, but I'm working with Spanish colonial sources. So if you've been to enough presentations about the colonial Philippines, you will have seen this map more than once. It is a map made by Spanish Jesuits with a Filipino artist. And it's not that it's a great cartographical achievement, but it actually has all these images that tell you a lot about the history of the Philippines and can help us sort of get the context for this paper. So if you close up on the sort of north, well, actually the south of the island of Luzon, you will see this Manila Acapulco galleon. And this was a yearly voyage of these galleons operated by the Spanish state that was sustained for more than 200 years. And they ultimately supplied silver for the Chinese monetary system in exchange for Asian manufacturers, mostly textiles. But this idea of a ship of silk and silver that can be traced to the 1930s classic that is still very influential by William Schurz, from where this map has been taken, is still very dominant in the imagination, even though the scholarly production in the last 20 years has largely redefined what we know in terms of the organization of the galleon voyages. However, a systematic knowledge of what the cargoes were like has not been possible due to the lack of itemized documentation and the problem of very rampant customs fraud. So my proposal has thus been to study the intra-Asian routes that are more documented and see the commodity flows, and not only because I believe that they're interesting on their own, but because if we turn the early modern trans-Pacific trade on its head by focusing on Asia rather than the Pacific, we can get new empirical insight. So right now, my research has basically focused on the particular corridor of intra-Asian trade, which operated on Chinese ships that we have come to know in English as junks. So here we see a junk from the image. In Spanish, they were known as champanes, which comes from the Chinese term samban. And as you can see from this Japanese rendering from the 18th or 19th century, these junks had a very different form and a very different hull from Western style ships. And they used these different compartments to maximize space. And this included maximizing space for human cargo. So these ships would carry an average of 90 people and could carry as much as 300 people. And Manila is important because it was one of multiple indigenous and colonial ports that were part of the eastern and western routes of the Chinese from southern Fujian province, who also partnered Chinese coastal shipping. And so after the opening of Chinese ports in 1684 under the Qing, the island of Amoy, Xiamen and Mandarin, became the hub of this Chinese shipping network of the South China Sea, with Spanish Manila and Dutch Batavia, which we see here, as the most important corridors of the network into the late 18th century. But in the course of this research into the Chinese shipping and merchant network, it became clear that it was necessary to understand the Chinese networks in the context of the non-Chinese networks that operated in parallel to these Amoy-based traders. And the two most common ships in this competing network were sloops, as in the title, and these bore one mast. And then there were ships with two masts, known as pataches. And it is actually pataches that were more common than sloops, but having patache or chalupa in the title seemed to be too jarring. But I'm ultimately more interested in economic cooperation by the people behind the voyages than in the ships or navigation itself. And the borders of this map are also a useful introduction to the cast of characters involved. First, we see a cross-section, let me go back. First, we see this cross-section of the Chinese population, and it includes both the Chinese Christian merchants and the Chinese non-Christians. And the Christians are and here the Christians have Westernized or Spanish garb. And the Christian merchants were very important because they were the cross-cultural brokers that facilitated exchange between Spaniards and the non-Christian Chinese who visited every year, because they were able to create this mercantile trust because of their religious status. And we also see here the Spaniards. One is under Under this parasol, these intra-Asian routes delivered about 20,000 paper parasols a year to the Philippines. A third group, which were the so-called non-European Asian foreigners, were very important. This included South Asians and especially the Armenians, who were involved in all the different intra-Asian routes that led to Manila. But missing from these images, however, are the Europeans who also joined these people in Manila. And these included Irish Catholics, French, Portuguese, and even English Protestants and Northern Europeans. And unlike the Asian foreigners that we see in this inset, the Europeans were not supposed to be there. And it was actually forbidden for them to be there. So there's a reason why we don't see them here. And however, they were really involved with the Spaniards as partners in these voyages. So having seen the cast of characters, having seen their ships, what did a trading season in Manila really look like? And here we have this anatomy of the trade season from the 1730s to 1760s. So we know that most of the China routes consisted on average of 13 Chinese junks going to Amoy, which I showed on the map, and 2 European-style ships, which went to the ports of Canton and Macau. And the most well-known Chinese product for re-export was, of course, silk, mostly in yarn form, as we see in the image on the top right. The cotton was actually higher in volume. The junk trade also provided a broad range of goods like the parasols for domestic use in the Philippines. The non-Chinese voyages were financed and operated by this diverse cast of characters that I described: ethnic Spaniards in Manila, Armenians, South Asians, Europeans of every stripe. And there were 2 ships arriving from Indian ports that were either independently organized by the non-Chinese networks of Manila or were covert operations of the East India companies or their free merchants based in India. And these were mostly full of Indian cottons for re-export to colonial Mexico. And we see this here with this red paisley kerchiefs that were referred to in English as bandanas and were very important in the Mexican countryside. Finally, there was 1 ship on average sailing to Dutch Batavia each year. And these voyages were also organized by this multi-ethnic cohort of non-Chinese. And Batavia was a source of the very prized cinnamon that came from Sri Lanka, which was bought from the VOC. And it was also a lifeline for strategic and consumer goods that were brought to Europe that were otherwise not available in Manila. So this idea about the anatomy of the trade season comes from the Manila Intra-Asian Trade database, as I have named it, which looks 1680 to 1840. And to just give you an idea of sort of the scale, this is not big data in any way, but maybe medium data. There were about 14,000 itemized, digitized images. So we have more than 2,000 arrivals. There are 348 shipping manifests for about more than 1,000 products. But there's still work that is pending. This was the work that I did as a doctoral student. So there was a limit to how much I could do. So there are about 600 manifests that are still left to be entered. There are also passenger manifests that I had been ignoring because they were for non-Chinese ships. So right now, this is sort of an exciting point because the research group I'm in KU Leuven in Belgium is interested in sort of picking up this project and expanding it in the way that one person cannot. And of course, I'm not the first person to attempt to do a database on shipping traffic in the South China Sea, and there are very important precedents on this. The major databases were done with the Dutch VOC sources, and very importantly, there's one on shipping traffic in Dutch Batavia for most of the 18th century that was finished in the 80s. And there's a more recent one for Makassar, which is in the island of Sulawesi. That's also for the 18th century, but it's more about inter-island trade within the Indonesian archipelago. So it's not really as useful, whereas the Batavia one I've been able to use as a comparison. And one of the questions is, if you're studying Chinese junk trade, why don't you look at Chinese sources? And the problem is that the sources that would be helpful are no longer extant. Though there is one example of Chinese sources being used, And this is for the trade between Amoy and the northern port of Tianjin, so domestic trade, but only for 2 decades of the 20th century. But this is the only precedent. Within the studies of the Galleon and hispanists, we have that the sources of the Seville archive run into statistics about the Galleon. They probably come from Chanu and his tallies that he published in the 1960s. But he had no name data, it was not itemized. So scholars have later gone on to look at specific periods and specific routes, gone back to the sources that he's used, which are the ad valorem tax reports of this tax known as the Almojarifazgo, and they've dug in again to get the actual name data. And I've built on this wherever I haven't been able to find manifest. The precedent for using manifest for Chinese shipping for intra-Asia is the work of Fang Zhenzhen, who is a Taiwanese scholar, and she has even translated and published some of these shipping manifests into Chinese, which is not very useful for most scholars of the Galleon and the Manila trade. So the way of constructing the database was basically locating in both the Manila and, well, starting with the Seville archives, and then the Manila archives, trying to digitize as many manifests as could be found, especially focusing on the name data, which can be used for social network analysis, and also the itemized valuations that can help us with analyzing cargo. And where these manifests do not exist, finding other kinds of lists or going back to the ad valorem lists. So this is an example of what I was able to do as soon as I had some tallies to compare both Manila and Batavia. And it's very interesting that these two measures of ship traffic, of Chinese junk traffic, actually move together. So this shows that the junk trade wasn't necessarily determined by causes in the final ports, but there were other sources that were affecting it, either at the level of China or dynamics in the South China Sea. Unfortunately, the Chinese junk trade data for Batavia does not go further than the demise of the VOC in 1799, but it would be interesting to see what would happen with the trade after that. And I mentioned these Chanu statistics. This is just an image showing how the information that I've been able to collect has helped to revise these tallies and, of course, lead them further into the 19th century with the data at the Manila archive. And also it shows where we have manifests that are extant that have been the ones that have allowed us to revise the data. Here is something that was important, actually very important for the whole workflow of creating the database. It was, once you have all these manifests, where do you start working? What can you do? What are the groups of documents that will give you the biggest returns? And so this is how I've come up with all these different groups and decided to focus on what I call the group 1 core, which gives us 15 years, so allows us to see some development rather than having just isolated years. And it has over 200 junk arrivals and 78 non-Chinese ships. This is just an idea, as I'm still mentioning the issue of creating the database. These are the kinds of documents that we had to go to for this 15-year period. And these are actually these documents were part of the judicial review of the governor. You can't really open these in the archive because they're made out of parchment binding. And so the archivists had to remove the binding and digitize everything for this to be actually readable. And this whole process of digitization took over 1.5 years. I just wanted to show this because, you never imagine seeing something that is aesthetically pleasing within a volume of accounting, but this is the inside cover of this document. And here you can see what the actual manifests look like and how they are a challenge to the reader, and how you need somebody who understands Spanish paleography to actually look through these documents. In these very early manifests, we have that everything is written in longhand, so you don't even see numbers. And this is for the Jerusalem, a ship that arrived from the Coromandel coast in 1743 under an Armenian captain. And this is what it looks like once it has been fed into the database and it has been transcribed and entered. And so this is the visual interface that I created so that myself and research assistant that I had for a limited number of hours could enter the data. So as far as the analysis of commodities, which is sort of the first sort of big item of analysis, what I can show you now is a sample of what the product mix for each of these sectors, the Chinese and non-Chinese sectors, looked like during this 15-year window. So this straddles a period between what is the 18th century heyday of the junk galleon trade and the depression in junk traffic, as you saw in the graph of Batavia and Manila, that followed into the 1770s and 80s. The low point that we see here actually coincides with the capture of the galleon Covadonga in 1743, captured by the English. And then there was a failed voyage of the next galleon that wasn't able to reach the Americas. And this shock clearly affected the non-Chinese trade in a different way than it did the Chinese trade. It was a greater effect on the non-Chinese trade. There's of course no way of knowing the exact value of imports. As I mentioned, there's customs fraud, and these are imperfect documents. But what matters here is the orders of magnitude and the spread of different goods that were actually imported. The large share of imports, as I mentioned, was textiles. And though I have not disaggregated silks and cottons in this graph, in both the Chinese and non-Chinese sectors, cottons actually had a small margin over silks as far as value and as far as physical volume. This is especially crucial since the importance of Chinese cottons has largely been overlooked by scholars because of the emphasis on silk. And one pattern, though, that we do see is that while the Chinese focused on silk yarn, so the junk trade brought silk yarn, non-Chinese were more interested in silk fabrics that they could bring from Canton and Macau, where they were designed for other European audiences. So we also see here that I've put together all the non-Chinese trade, both to China and to India and Batavia, because the traders who were involved in these voyages, mixed these different routes in their operation. And in the case of the Chinese, this is mostly coming from Amoy, though there would have been re-exports of the finest silk yarns from the Yangtze Delta, northern up on the China coast. And if we look at specific products, we see that the junk trade combined textiles for re-export, as I mentioned, but they also had paper that was used by Spaniards, the parasols that I mentioned, and all kinds of different cheap goods that could be used domestically by the Philippine population, including a lot of cheap ceramics, especially plates. And of course, we have that in what I've called bulk goods. What makes up the majority of value here is cinnamon. But we also have that there is a lot of foodstuffs that were imported. And one of this was wine that was necessary for communion. And so it was strategic good because if you are a Catholic state and that is your state ideology, you can't run out of communion wine. And this had to be sourced from either Macau or Batavia. And of course, from Batavia and India, we also get iron. And it had to be European iron because it had different properties that Chinese iron that was imported and was in pellets. And iron was needed as especially for the building of galleons and other ships. We also have that from India, we get saltpeter because you need both saltpeter and sulfur to make gunpowder. And the Philippines was an exporter of sulfur, but they didn't have saltpeter. So as far as defense, it was very necessary to cultivate this route. The other sort of line of analysis that I've covered is the social network analysis of these shipping networks. And so here you see the Chinese and non-Chinese graphs. As you can see, they do not intersect. And these graphs are, in fact, modified social network graphs, where the large colored nodes represent individual ships, though more technically the ship owners, and the size of the ship nodes is proportional to the average value of cargo on those ships. The small nodes, which you will see here in white and also in black, represent captains / supercargoes, and the lines connecting them are journeys made by those captains on that ship. And the thicker lines represent multiple voyages by a same ship captain dyad. And notes that share the same color indicate that they're part of the same component or clique or community. And the underlying assumption of this analysis is that these subnetworks, these cliques of ship operators and owners work within their clique, but not with others. And what determined that, I don't know. The gray dyads at the bottom of each network represent the non-network voyages. So these are ships that only arrived once. This actually, they actually make a greater percentage that would be expected. And this is actually in line with what An Ching-kyung, who did the data set for Amoy Tianjin voyages, has found, where he found that up to 69% of arrivals to Tianjin were on one-time arrival vessels. So what this can be interpreted as is that these ships are not only going to Manila, but they are going to other destinations. So these are not dedicated to one route. Some are, others are not. But as we see, even with some of these ships, if you look at the lines, there's not more than 1 or 2 voyages of that ship to that one destination. So we really need to think about the entire Chinese network. Here I've taken the central components to look at them more closely. And as you can see, the difference between the Chinese and non-Chinese is one of scale and complexity. And if we zoom in on the Chinese component, we see that it is actually a component that Gephi, the software that I use, identifies as being made of multiple cliques within that component. And we see, if we look at the ship that is at the center of this, this component, it has a very high number of centrality. It is because it is the owner of the Hokan, would have been someone connecting very different and disparate cliques with each other. And we see that we find these very important bridges within these graphs. Something else that I would just like to point out before closing on this is you can see in blue the family names of the captains that operated the Hokan in different years. And we see that they all have different family names, different Chinese family names. And this might not seem like something important, but a lot of the assumptions that are made about Chinese shipping is that the land-bound corporate lineages of Southern Fujian that were very important, the main economic unit in Southern Fujian were also involved in shipping. And at least not at the superficial level, we don't see evidence of lineages being involved in ship operation. Though we can't really write away the South Fujianese lineage and its relationship to shipping just yet. So in the case of the non-Chinese component, though 65% of non-Chinese journeys in the network were captained by foreigners, here we see that in this main component. Okay, yeah, I'm almost finished up. And what I was just going to say is that this particular component is different from the others in that it actually puts together both non-Chinese foreigners and Spaniards operating hand in hand within this component. And I just want to call your attention to the captain at the very top of the graph, Tomé Gaspar de León, who made the largest number of voyages in the database, actually, on his ship, the Espiritu Santo, though he also captained other ships. And my colleague, Chrissy Flannery, and I have actually written an article about Tomé Gaspar de León, where she has combined sources in cultural and social history, and I have used information from the database and trading to write sort of a microhistory of this captain who was very important, not only as a merchant, but also an agent of the Spanish Empire. And so with this, I finish sort of giving you this view of what I've been able to do with this database, and I would love to hear your impressions and suggestions as to what more can be done with this data set. Thank you.
Fantastic, well done. A really interesting paper. Are you able to unshare your screen so that I can see people? And does anyone have any questions at all or comments? Thank you. I think Florian, yeah.
So sorry. I recently, well, I didn't previously, I just saw off a paper that's like Mark, I don't know whether you know Mark Koyama's paper on the Manila to Acapulco trade. No. So,
no.
As far as I understand, there is so I think he has a paper, he looks at all the voyages between Manila and Acapulco, like the, how's it called? Manila Galleon trade.
Manila,
so there's a massive trade going on, or massive, as in like substantially trade going on in Spanish Empire going this direction. Is there any links, like, is there any influence in like in which the way that like these kind of like, so your kind of like is a local, to some degree, local kind of like network trade. So like, how does this kind of like trans-Pacific trade, does that influence it in the sense saying like, if something shows up, if some galleon shows up out of Acapulco into Manila, does that trigger ships basically trade in the region, or the other way around? It's like, is some of the trade in the region essentially a feeder into that kind of like international trade as well? So what's the link between kind of like that more local trade and the kind of like big ship international trade, if we want to call it that for lack of a different word?
No, they are completely linked. I mean, as I mentioned, I'm looking at the intra-Asian part to kind of give that perspective. But I mean, there were issues where if the galleon, for example, did not arrive one year, this would be terrible for these intra-Asian merchants who came with their ships filled with commodities, and then there wasn't even actual silver to buy their goods. And so, that is why I was interested in the case of this, where we see that dip because of that ship that was captured by the English and the effect that had. And if you saw that image, for example, the supply of certain goods sort of stops after that shock and doesn't tick off until later. So of course, they are completely connected. And what I'm looking at right now is, as far as the merchants who were involved in the galleon trade in Manila, who were in a sense considered junior partners to the Mexican merchants, how they were actually able to get involved themselves also on the South China Sea trade. If they owned ships, if they, how were they involved with these different groups, the Armenians? So I am definitely looking at that connection a bit more from the people side, actually.
Fantastic. We're really out of time, colleagues. I don't know if anyone has just a very quick question that could be followed by a very quick answer, but we can also, of course, connect privately to chat. It's been a long, but I think very successful day. I don't know, Lionel, if you wanted to say anything, but we're kicking off again tomorrow morning at 9:30 a.m. Sydney time. I think that's it for today's session.
No, I would just reiterate thanks and to all the presenters. And
absolutely.
We really look forward to tomorrow.
Absolutely. Thank you, folks. All the best. Have a great evening, and we'll see you tomorrow.
Thank you, everyone.
Bye-bye.
Bye.